On August 7, Paytm announced that Antfin will transfer 6.53 crore shares to Resilient Asset Management (BV), an entity owned fully by Paytm founder Vijay Shekhar Sharma. With this move, Sharma will increase his holding in Paytm to 19.42%, while the stake of Antfin will drop to 13.5%. Resilient will issue optionally convertible debentures to Antfin, which will allow Antfin to retain the economic value of the 10.30% stake. There is also no nominee for the board of Paytm by Antfin. Let us turn to independent market analyst Ambarish Baliga to understand the larger goals for Sharma with this latest move.
First of all, Mr. Sharma's holding was in single digits, which will now move closer to about 20%. So the first goal surely was to consolidate his holding in Paytm, as he had got diluted over the past few years. Secondly, this is cash neutral deal as of now, in the sense that there is no outflow of cash from Mr. Sharma, though there will be an outflow at a specified future date if the debentures are not converted into equity. We don't have access to finer details such as cost of this arrangement, etc. But valuation-wise, it could be a good deal for Mr. Sharma since the market price is now 40% of the IPO price, whereas the visibility on profitability is much better now than it was during the IPO. It will consolidate his position on the board and ensure that he doesn't remain a minority participant, especially when valuations are expected to move up much higher from here.
197 Communications, operating under the Paytm brand, reported a loss of 358.4 crore rupees in the April-June quarter of FY24. The company had posted a loss to the tune of 645.4 crore rupees in the same period last year. However, the fintech major's quarter-on-quarter losses more than doubled by 113% from 167.5 crore rupees in the preceding quarter. But the company said that its merchant payments volume grew 37% year-on-year to 4.05 lakh crore rupees in the April-June quarter of FY24. This latest development also holds significance against the backdrop of India's changing stance on foreign investments, particularly in relation to China. Following the Doklam incident, India has been cautious about Chinese investments due to geopolitical concerns and issues of national security. The government's ban on several Chinese apps and restrictions on Chinese investments have reshaped the investment landscape. Is the move part of a larger trend of Indian firms distancing themselves from Chinese investment? If so, let us understand how this will impact the fintech major.
Sensitivities to Chinese investments are high, and in fact there was a supply overhang of the stock from that investor. Now, if there was a strategic investor in place of Mr. Sharma, who had acquired hypothetically, then that would be a different scenario, and the promoter directly acquiring the stake is a different scenario. It gives far more confidence to the investing public.
When the incumbent government as well as the general sentiment is against China, it is prudent to distance oneself from Chinese investments. Anyways, Chinese investment in Paytm has been steadily coming down. In fact, Alibaba exited fully in February. Now this transaction has happened. So as the performance improves, Paytm will get other marquee investors, so Chinese investment won't really be relevant.
It is not just Antfin and Alibaba, but other shareholders have also cut down their positions in the company. Japanese company SoftBank has also been offloading shares through open market transactions. In November last year, the Reserve Bank of India declined Paytm Payment Service Limited's application for operating as a payment aggregator. The RBI had also directed Paytm Payment Bank or PPBL, a wholly owned subsidiary of Paytm, to not onboard new online merchants until it complies with the foreign direct investment guidelines. So what does the road ahead look like for Sharma's Paytm?
The road to profitability is decently clear now, and this reflects in the stock price, which has bounced back from the lower levels we saw in December last year. Hopefully, it should be free cash flow positive by the year end. So, naturally, the valuation should improve from here if the management delivers on its promise.
With bringing down Chinese investment and consolidating his position in the company, it remains to be seen if Vijay Shekhar Sharma's consolidated position leads Paytm to profitability.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.
He's about to land his dream job. Business Standard.